So I've blown over $20,000 in the last 7 years. Okay, 4 out of those 7 years, I blew 20 grand in trading, and that was from not my strategy, not from what pair or product I traded, not from my broker, but because I had poor risk management. So in this video, I have boiled down 3 major changes that I made and implemented to my risk management to stop blowing accounts and stop losing money. Because if you're losing money, why are you trading? And there's so many cliche rules about this, right? A lot of YouTubers and article writers and whatnot recycle the same cliche risk management advice. You're probably sick of hearing those. I was sick of hearing those stupid cliche, pieces of advice people give about risk management. But in this video, I'm not going to do that, okay? Because I struggled for 4 years blowing money and just ice skating uphill. I know exactly how it feels, okay? I know the pain, and I know how it feels to receive cliche advice. It just doesn't help. So what I'll share in this video are 3 major changes I made to actually get funded and be fully funded with prop firm companies, to take payouts, and to actually make real money with my personal account as well. So these are practical tips, practical things to implement, no wishy-washy stuff. Let's get into it. Hello, Magic Whiteboard. Here we are. This is the 3 rules. All right, let's start with the first one. I'll reveal them to you slowly. The first one is taking more one-to-one trades. When I was trading in the earlier days, what you see on social media is a whole lot of this, right? You'll see price action looking like this, and there'll be a little tippity top and then a meltdown, and you'll see these influencers posting their entry like right here. They have like a 20 tick stop loss, and they just apparently capture that whole move for like a 1 to 40R trade, right? And you see this posted all the time on Twitter, YouTube, etc. And it sets this precedent in your mind that your trades should be aiming for more than 1 to 1R, per trade, per setup, which, in some cases is the case. You can capture bigger moves like this sometimes. But the reality is, boys and girls, and this is what I found to work most for me, is when I started to focus more on just taking 1-to-1 trades, okay? Instead of capturing that whole move, if I have a 10 tick stop loss, right? And I'm going long from this point, there's my 10 tick stop loss, and I just target 10 ticks, take profit, maybe 11 ticks just to cover my fees. But basically a 1-to-1 trade, I'm going to, number 1, win more often because you can capture 10 ticks like that all day long. And number 2, you're not going to be giving profits back to the market. What would happen a lot of the time to me that would cause me to blow accounts? A trade may move in my favor, up 10 ticks. It's hit 1-to-1 already. The way I would blow accounts in the past is I'd want more from that move. So I may move my stop loss up to break even. Initially, price starts to move up, and I'm thinking, cool, now I'm getting 20 ticks, I'm getting 30 ticks. And I'm getting happy, I'm getting greedy here. All of a sudden, price drops back down. It comes back down near to my break-even stop loss. As it approaches break-even, I then start to move the stop loss back down, thinking, oh, surely it will recover and come back. But it doesn't, and it comes down and takes me out. That's something that I did all the time, and it always blew my accounts. I always went into drawdown doing this stupid mistake. Whereas what could have happened is I could have just accepted, been in there, taken my 1-to-1, and then been done for the day, okay? It's in trading, it's not even about how many ticks you secure, because a 10 tick move with a bit more size can be equal to a 30 tick move with less size, okay? And 10 tick moves happen all day long. You can grab them in and out fairly consistently. You guys follow my daily trading email. You'll see that most of my trades are around that 10 to at the very most 30 ticks per day, and then I'm done for the day. I'm just aiming for these base hits every single day because they happen consistently. If you really do have an edge in the market, over time, you're more likely to be hitting that take profit versus the stop loss, even at a 1-to-1, okay? It's essentially a coin flip, a weighted coin flip. So that was one that I had to hammer into my head, okay? Even as recently as just last year, is to focus more on 1-to-1 trades instead of the big ones. Daily consistency like that really stacks up, and it's a lot better on your psychology, a more stress-free way of trading because you're in and out of the market fairly quick and you can close it off for the day at 1-to-1, secured your money and come back the next day, okay? It's one of the best things I've done to stop blowing accounts and stop giving money back to the markets. And what I do as well, guys, to this day is once a trade hits, let's say I've gone long, there's my 10 tick stop loss, there's my 10 ticks take profit. Once I've gone long and price pushes up to that 10 tick take profit area, a lot of the times what I'm doing is instead of having a hard take profit, I'm dragging my stop loss up to plus 10 ticks, so that if it's a nice momentous movement and it pushes through past 10 ticks quite quickly, I can then squeeze more out of that move and pull my stop loss up, but I've already secured 10 ticks. There are at least once a week times where I'm securing a lot more out of a 10 tick trade just because it quickly pushes past 10 ticks and doesn't come back, and I'm able to trail that stop loss up, or at least just move it to plus 10 ticks and just see what happens with the rest of the move, because all the rest of that is gravy afterwards. So that's the first tip. Tip number 2, strict max loss and max profit targets. Let me explain. Now this one is harder to implement because it requires you, okay, you need to be disciplined enough to do this. That's easier said than done. Strict max loss and max profit targets. Let me run you through the psychology of what's probably happening to you and what used to happen to me. Okay, so say I am trading and maybe I've hit plus $200 on the day. In the initial stages of a top step funded account, for example, that is my daily target. Building my own drawdown cushion, that is my daily target. In the past, I would hit $200. Along comes that demon called greed and tells me I need more. I might re-enter a position trying to squeeze more out of the trade, even though it's already closed at plus 200. Or I might find a setup later on in the day, take another trade, and that one ends up being a loser. Maybe I give back that $200. So I hit my profit target for the day, but because of greed and wanting to trade more, I then give it right back. And then what happens after this is a vicious cycle. I've given back the profit, now I'm back at zero, and instead of accepting the fact that I'm just back to where I started, I now try and jump in more trades, even ones that might not follow my rules, and to try and make back the $200 that I lost. And in trying to make back that $200, I'm then down $200 because I lost another trade due to emotions, a bad setup, or maybe it was a good setup, but it just didn't play through. Happens sometimes. And now I'm down 200, and now I'm chasing, trying to be like, well, I was plus 200 initially, so now I need to make back 400 to get back to where I was in the first place. Okay, and it's a vicious cycle I know you can relate to because I've been there, and it's very human to go through this. It's just how our brain works. What you need to do to avoid this is implement strict daily profit targets and daily loss targets. This is what I had to do to stop blowing accounts and stop losing money. Is my rule even to this day. Once I've hit my profit target for the day, I don't do it by dollars now because size changes based on which account I'm trading. For each day on most of my accounts is just 10 ticks. Okay, I'm just looking for 10 ticks a day, and those paper cuts build up. I have one account where I aim for 30 ticks a day, but that is trading slightly different. So it's split across two different strategies or approaches, if you will. But if I hit plus 10 ticks on the scalping accounts, I lock myself out, and then my other accounts plus 30 ticks, okay? And you have to stick to that, because if you're anything like me, even if I've had a good day, I'm liable to give it back and then fall into that vicious cycle, that bottomless pit of greed trying to make it back. So that is a must do for me, okay? That's how I stopped losing money and stopped blowing accounts, having a max profit target and locking myself out. And then the same for losses, self-explanatory. A daily loss limit also reflects the one-to-one. If I'm down 10 ticks on the scalping account, then I must stop. If I'm down 30 ticks on my more swing type account, then I must stop, okay? And I lock myself out, and I have to follow that. The moment I break those rules and don't follow that, that's when the downward spiral starts to occur. Okay, so these are must. You have to implement this if you want to stop losing money. This is what you have to do. Not financial advice, but you have to do it. Not financial advice. Do your own research, make your own decisions. And honestly, guys, if you are struggling right now with risk management, okay, this is probably the one that's going to make the most difference. You really have to stick to strict profit and loss targets and stop yourself from going down the rabbit hole. Now, the last one, this kind of flows on from rule number 2, is divide your drawdown. Now let's do some math on this. This one also requires knowing your statistics a bit, okay? So let's, as an example, use the Top Step 150K funded account, okay? We've got a 150K Top Step funded account. Now your true account size on that, it gives you a drawdown of negative 4.5K, so you can lose up to $4,500 until you've blown that account. What do I mean by divide your drawdown? I mean figure out how many days in a row would it be unrealistic for you and your strategy to lose. So this is what I mean by having to know your trading statistics, your personal trading statistics. And I'll give you an example of mine. So when I used to trade ICT or smart money concept style, the most days that I lost in a row was 10 days. I lost 10 straight days in a row at one point when I was trading ICT. That was my maximum losing streak when I was trading ICT. Now, obviously, I trade order flow and volume profile, and my maximum losing streak in the last year has been 3 days. I've lost 3 days in a row. That was my maximum losing streak trading volume profile and order flow. So it's quite a big difference there. So you need to know your stats somewhat, either by back testing or by forward testing, or just by looking back. If you're already keeping a trading journal, looking back and see what was your worst losing streak, where you were following your strategy rules to the T, playing by your own rule book, but you just had, a set amount of days where you've lost. What was your worst losing streak? So for example, if you're like me when I was trading ICT and you had 10 losing days in a row, what I do is I double that to 20. So double that number, 20 for ICT and 6 for volume profile. So then what I'm doing is I'm taking that drawdown number, your max account size, again with the top step 150K account, 4.5K, and then with the ICT one, dividing it by 20 is 225, okay? The 4,500 divided by 20 is 225. So that means if I'm trading ICT style, my worst losing streak was 10 days in a row. I double that, so it would make it 20 days in a row for me to blow the account. This becomes how much I would risk per day. I would set that number in the Top Step X platform to lock me out if I lost $225, which means I'd have to lose 20 days in a row before I've blown the funded account. And again, if you're aiming at one-to-one trades, that means you can make $225 on a winning day, all right? So there's nothing to scoff at, and then times that by 5 with multi-funded accounts, and you're looking at over $1,000 a day, aiming at one-to-one with a risk of 225, meaning it would take 20 days to blow your account. Even if your stats show that you have lost 10 days in a row before, you still have a pretty bright upside there. And then of course, same with the volume profile. I'm not going to run through all the math again, but this is how it looks for me at the moment. Divide that $4,500 drawdown, divided by 6 means I can risk 750. So my worst losing streak was 3 days in a row, times it by 2 equals 6, and divide that by 4.5K. Means I can risk $750 per day, and it would take me 6 days, 6 losing days in a row to blow the account. And then on a winning day, I can make $750. And if I'm copying that across 5 accounts, it's almost $4K, $4,000 just about per day on a winning day. So that's what I mean by divide your drawdown. Figure out your worst losing streak, times it by 2, and then divide your max drawdown limit on your funded account by that number, and that is how much you set your max daily loss limit at, and you stick to it. Okay, it means you'd have to have your worst run ever before blowing the account. Now that one was also a game changer for me, even just mentally knowing that I'd have to lose when I was doing ICT, for example, that I'd have to lose 20 days in a row before that funded account is gone, is quite a relief. It gives you a lot of mental wiggle room in your head. So the main thing with all these rules though, guys, is you have to stick to them, okay? All the rules don't mean shit unless you stick to them. So stick to them. If you don't stick to them, you're going to keep losing money. You're going to keep blowing accounts. And don't do that. If you really want to trade, you really want to be a trader, take it seriously, stick to these rules. You're going to have human error moments where you do mess up. Don't be too hard on yourself for that, but make sure on the whole that you are constantly improving your discipline to stick to these type of rules to make sure you stop losing money. Why would you trade if you keep losing money? Learn to make money, implement risk management. Risk management is more important than strategy in making money long-term with trading. So put a lot of importance on it. That was my video, guys. These are the 3 things that have helped transform my trading and stop me from blowing accounts and losing money, and has helped me to conquer risk management. Okay, I'm in a good place because of these rules. And I hope you found this helpful. Like the video if you did. Comment down below what you found most helpful, what your thoughts are on this. And that's it. Goodbye.